All right, let's talk about the one asset that has everybody buzzing: gold. I mean, prices are absolutely smashing records, but they're doing it in a way that seems to break all the old rules of finance. So, what's really going on here? Let's dive in and figure it out. Here's what we're going to cover. First, we'll look at gold's new rules, because believe me, they've changed. Then we'll unpack the three big drivers behind this gold rush. After that, we'll talk about shields and spears, a really simple way to think about where gold fits in your strategy. And finally, we'll get to the bottom line, your smartest move. Okay, let's get right to it, because this is the central mystery. Gold is on an unbelievable run, hitting prices that, frankly, almost nobody predicted. But it's how it's happening that's got everyone so confused. It really feels like the old financial rulebook has just been tossed out the window. And just to give you some perspective, we're talking about gold blowing past its previous records, hitting these absolutely staggering new highs. This isn't just a little bump. It's a massive, game-changing rally that's seen huge gains this year alone. And that right there, that's the question that has investors and even the most seasoned analysts scratching their heads. For decades, the logic was super simple. But now, that logic is broken. So why on earth is gold reaching for the stars when its old enemy, the US dollar, is actually holding up pretty well? This lays out the shift perfectly. The old role was basically a seesaw, right? When the dollar went up, gold went down. It was simple. It was predictable. But the new reality? Now they can both go up at the same time. That historic tug of war we all knew, it's over. Gold is playing a whole new game now. So if the dollar isn't calling the shots anymore, what is? Well, it turns out we're in what you could call a perfect storm, and it's being fueled by three huge forces powerful enough to completely rewrite those old rules. First up, geopolitical chaos. With conflicts and trade tensions flaring up around the globe, investors are doing exactly what they've always done. They're running for cover, and gold is the ultimate safe haven. Second, and this one is a massive game changer, is a huge central bank buying spree. We're seeing nations deliberately moving their reserves away from the dollar. It's a trend called De-Dollarization. And third, you've got rate cut hopes. The market is basically betting that the US Fed is gonna have to cut interest rates soon. And when rates go down, holding an asset like gold, which doesn't pay any interest, suddenly looks way, way more attractive. And we're not just talking about one or two countries here. Look at this chart. Central banks from China and Russia to Turkey and India are buying up gold at a record pace. We're talking about 64 tons a month. This creates a massive, steady demand that just wasn't there a decade ago. And if you want to see just how big this is, look no further than India. The Reserve Bank of India now holds a record 888 tons of gold. But here's the kicker. While it's adding all that gold, it's also cutting back on how much US government debt it holds. This is de-dollarization happening right before our eyes. Okay, so we've covered the why behind this crazy price surge, but let's get practical. What does this all mean for you, for your portfolio? Let's shift gears from the market to your strategy, using a really simple but powerful idea: shields and spears. I mean, this is the question, right? We are living through an incredible AI and semiconductor revolution. That's the future. So how do you justify putting your money into, well, an ancient metal, something that doesn't have the same utility as a microchip? It can feel like you're choosing the past over the future. But the answer is you actually need both. They're not competing with each other. They're two different parts of a smart, modern strategy. Think of your high-growth tech stocks, your AI, your semiconductors, as your spear. That's your offense. That's the part of your portfolio that's designed to go out and aggressively build wealth. Gold, that's your shield. It's your defense. Its job isn't to make you rich. Its job is to protect the wealth that your spear has already created. Which brings us to our last and most important section. With prices this high, it is so tempting to want an even bigger shield, right? But is that really the smartest move? Let's take a look at what the experts think is coming next. And honestly, the future is anything but clear. On one side, you've got the bull case. You have banks like HSBC calling for a potential peak of $5,000 an ounce. They're betting that the central bank buying and the geopolitical chaos are here to stay. But then you've got the bear case. Analysts over at ANZ Bank are predicting a peak followed by a potential 20% correction if the US Fed has to keep interest rates high to fight off inflation. So, the really crucial thing here is to understand what could end this amazing run for gold. A correction could be triggered by any of these things: a return to global stability, an end to the big trade wars, Maybe some surprisingly strong US economic growth, thanks to the AI boom, or a Fed that decides to raise interest rates. If any of this good news happens, money would probably flow out of a safe haven like gold and right back into growth. And this quote just nails it. It perfectly captures the risk here. If you go all in on gold, you are making a massive, concentrated bet on continued crisis, war, and economic trouble. A portfolio that's only gold is completely unprotected against the possibility of peace and prosperity. And this is why it's so important to understand what an asset like gold is really for. It's a hedge. And hedging, at its core, is a risk management strategy, not a profit-making one. It's like insurance for your portfolio. You don't buy insurance hoping your house burns down so you can cash in. You buy it to protect yourself just in case the worst happens. So what does that actually look like? Well, for most people, a balanced, diversified portfolio is the answer. Gold is just one part of that alternative slice, usually recommended at around 5 to 10% of your total portfolio. It's a strategic piece of the puzzle, but it's not the whole puzzle. It's the shield that's there to protect your spear. So we'll end on this question for you to really think about. In this new world where all the old rules are broken and you have these huge forces competing with each other, take an honest look at your own strategy. Are you all offense, just chasing growth with no protection? In other words, is your portfolio a spear without a shield? Thanks for tuning in.